Welcome to Market Matters. I'm Nadia Hassan together with Jonathan Gunn. And Sulhi there in the corner is going to give us our Brooks call. Brought by AmResearch. This is what you picked. KKB Engineering up 6.29% today to RM1.52. Why does AmResearch like it? Is it pretty or is it hot? Like so, John can take it out on a date.
Well, I don't know about hot, but I think something is certainly brewing in KKB Engineering. Now, for starters, KKB Engineering is owned by Datuk Koo Kak Beng with a 43% stake. But interestingly, though, I think you know this company very well. Cahaya Mata Sarawak, who doesn't, right? It is they have a 28% stake in KKB Engineering. The core business is in steel fabrication industry. Now, recently, last Friday, in fact, KKB Engineering announced that they have bagged 3 contracts from 3 different players. The first one is a Talisman, which is now owned by Spanish giant Repsol. Second one is Sarawak Energy to supply 1,000 ton of fuel storage tank. And the third one is SESCO, Sarawak Electricity Corporation, to supply steel products. Now, these 3 contracts collectively worth 171 million ringgit. Now, what I think the contract is going to be very good for the company because it will be value accretive and it will also replenish their order book. Currently, the outstanding order book is about 13 million ringgit. Now, adding 171 ringgit, it's about 200 million ringgit of outstanding order book.
So, Sulhi, because I'm looking at the sectors they are actually exposed in, steel is one heck of a
industry. I understand,
and an industry currently, and you also mentioned that they recently ventured into oil and gas. The thing is that both these sectors are not actually doing very well.
Well, okay, and also for me, the other thing, looking back to our share price, the stock has appreciated 18% since February. Is there still room to move, or do we have to probably go home on this?
Well, the stock still has more room to maneuver because you have to understand that KKB Engineering was first, their business model is always in steel, but then they saw opportunity in the oil and gas. So the stock actually went down a bit on concerns that they are actually, exposed highly to the oil and gas.
Which is what John said as well.
Which is what John said, correct. So they want to diversify their income base, basically.
Yeah, but you saw Goldman Sachs threaten $20 a barrel, $20. I mean, doesn't that worry to anybody?
I guess it's a matter of timing, but
But it is worrying. But at the same time, I think the Goldman Sachs report reflects mainly on the upstream players, the pure upstream players, because KKB Engineering, you have to understand, they only supply steel products, piping, manufacturing, etc., equipment to the players.
So, okay, what does AmResearch have on it? Is it a buy or sell?
Yes, AmResearch has
and what else do they like about it?
Well, AmResearch has a buy call on KKB with an unchanged target price of 2.05 ringgit per share. Now, you see, the thing is, I think there's a lot of potential for this company, basically. If you look at the earnings, right, the earnings has been, second quarter earnings are a little bit dismal, revenue went down by 38%, net profit went down by 12%, but on a cumulative basis, in the first 6 months, the earnings are tripled and revenue that jumped 17%, and the company is enjoying double-digit margins.
Okay, so in summary, what we do like about it is the fact that, yes, it has a whole bunch of contracts. That's good for it. Oil and gas exposure, however, is still also a worry. Let's see whether or not they can weather the storm, but AmResearch continues to like it.